Hi all, this is Dr. J streaming live from Long Island, New York. This is my third attempt at doing this video. I spent about an hour trying to do it and retrieve what I did like at about 2:45 p.m. And that failed. I don't know what happened exactly, but I was locked out of my channel. I couldn't get back to the video editor. I couldn't do anything. So I had to wait. And when I had an opportunity, I tried to see if I could retrieve it. And that didn't work out. So I deleted like 49 more seconds. I don't intend to delete this one. I'm pretty sure, I'm confident that it will go through. I don't know why I'm so optimistic, but that's my nature. So as always, your own due diligence. My opinions are strictly my own and do not constitute investment advice. Seek an investment professional, certified and licensed, and all that good stuff if you want to follow any of my ideas. Occasionally, Dr. J has some great ideas, but occasionally I have some clunkers. If you like this video, give me a thumbs up and subscribe and tell your friends about me, share the link, write comments, all these good things. I'm going to go to the video charts pretty quickly. You're also encouraged to give me some chat messages. Some of you might actually be watching for the third time, because some of you watched live when I did it at 2:45, and some of you watched live when I did it, attempted to retrieve that video about 10 minutes ago. So I appreciate you coming back. And if you want to chat with me, that'll be fine. I'm going to put it on my phone so I can receive the chat messages. And we're going to look at various support levels based on fib sequences, fib retracements, also based on simple moving averages, 200-day in particular. So let me actually go to the live presentation using regular YouTube, see if I can get there, and see if I can see any live comments or not. There are 5 of you watching. JD says, we are live. Yes, JD, we are. Greg says, hi, Jiggly. Oh, Jiggly's on. Tell me honestly, is it all over for CVM? Jiggly, I wish I knew. I am not a happy camper. I didn't sell a single share on the way down. I know I should have, but I didn't. So I'm still in it to win it. I don't know how much longer that's going to be. I actually still have a profit, but a lot less than I did at $8. The price would tell you that it's all over for CVM, yes, but I don't know. Unless there's a leak of the data, then how could one be sure? I mean, it's gone up on pure speculation. Maybe it went back down on pure speculation. It all depends on the data readout, which hasn't been announced yet. So who knows? Hey, Greg, you're back. CVM better not be over. I just bought into it at $4. There we go. That's reason enough to stay in it, I think. I'm just kidding. But JD, good luck to all of us. I might actually, I don't know if I'm going to sell, add, or hold, but I have enough of it that I don't really need to add. And I probably won't sell. Kamal, I also bought CVM. Join the club, Kamal. JD, hi, Greg. Afternoon to you all. Greg, hi, Kamal. When a stock is 60% of its high and gets halved, it terrifies me. Jigglypuff, it not only terrifies me, but I feel like there's a hole in my pocket. Buckhead Creek hasn't lost faith. His lady friend broker says it's going to be okay. And who knows, maybe it will be okay. There's no way for us to foretell this one unless you look at the price action and say there's a leak, the data's out, the trial failed, It didn't meet its primary endpoints, and that's why it declined from 8 to 4. If you believe that, if you're paranoid, I'm not so paranoid that I believe that, so I'm going to stay in. You, of course, can do what you like. It's a free country. Dr. J has lost money before. I'm not afraid to lose again. It's part of the game. You win some, you lose some. My biotech, I look at it this way. My biotechnology portfolio is my highly speculative portfolio. And I'm willing to take these gambles. I said earlier, it's like going to the pass line at Atlantic City and laying your money on the pass line, right? At craps. I use craps as an example because that's a game that I like to play. Or maybe it's like going to the, I don't know, what other games? A roulette wheel and betting it all on black. Because you're probably at 50% either way, being that let's say it's 50% either way. I mean, might as well, because we have no idea what the true odds are. So it's equivalent to something like that. Okay, so I'm going to go to the video charts. JD says he can't fit it all in the box with me when I go. That's one way of looking at it, JD, but maybe some of your grandkids could use it. All right. Okay, so I'm really interested in the overall market at this point because, you know, to dwell on CVM or ATHX or any other of my wonderful biotechs in isolation doesn't tell the story of the markets. It doesn't tell the story of the trade wars. It doesn't tell the story of what's been going on with the correction. So what does tell that story is some of the indexes. The Dow 30 could tell us, give us a big hint whether we're ready to resume the uptrend. I do not think this is the end of the bear market, no matter how hard the White House tries. Well, maybe they could succeed in killing the market if they escalate the trade war. I don't know. But short of the escalation of the trade war, I think this market will come back roaring in case, just in case the China deal is reached, it'll come back super hard. And Mexico, I'm not really too worried about. Okay, I think some agreement will be ironed out with both China and Mexico, but then again, I am an optimist. But then again, Donald Trump is a great negotiator, right? So let's hope. Full screen. Okay, where are we? Well, we're right, lo and behold, we're right at the 38.2% retracement. I know it says 61.8%, but that's because I didn't start here, I started there. I went backwards, I should have started here when I drew the fib retracement. So it's exactly 100% take away 61.8 is 38.2. So it's right there. So it has every right to stop and go up on Monday. Look, I'm not making this up. It's exactly at the fib retracement level, 38.2. Now that happens to be a very, very common retracement level for corrective waves. They often stop there or at the 50% level or at the 61.8% fib number. Why do they often stop there? You got me. I have no idea, but fib numbers are amazing. It's like magic. Maybe enough people believe in them and it's a self-fulfilling prophecy. I don't know. Or maybe there's some kind of natural phenomenon associated with these Fibonacci numbers. They really don't seem like much. 1 + 1 is 2, 1 + 2 is 3, 2 + 3 is 5, and so on. So you can generate them very easily. And it's really the ratio of the nth Fibonacci number to the n plus first Fibonacci number that gives you these the constant 61.8%. It's really not 61.8%. It's really 0.61 something or other, but not exactly 0.618. It's called the golden ratio, I believe, or phi. That's unimportant. What's important is it stops here often. It's like Penn Station or something like that. It just makes a stop right here and then goes right back up. And it's very possible that we will go just a little bit further down and come back up and close above the 61.8 on Monday. It doesn't have to go immediately up. It can go a little bit down naturally, come back up. If you see a candle that's green, that does exactly that and closes above Friday's candle, that would give you an engulfing. So I'm looking for a nice big green candle on Monday to prove me right for a change, or that doesn't have to prove me right. More important is that it would give evidence to the correction being over. And who knows, maybe Washington will have something positive to say that will spur the markets on Monday. Let's hope. None of that Mexico stuff, that negative stuff. We want positivity coming out of the White House. All right. Let's look at, what's this? The NASDAQ composite. All righty. NASDAQ composite. I was just reading some of the chat messages. Nothing earth-shattering going on. Okay. This, lo and behold, where did this one stop? From the December 24th lows. It stopped on Friday just above the 38.2. The 38.2 level is what? I can't see. It's, is it, I'm not sure. Is it 74.53? No, that's where we closed. So it's a little bit below where we closed. I ought to blow it up so I can see better. It's very close, right? Look, very close. So it could go down a little bit more and then go up just like the Dow. Miraculously, this 38.2% retracement seems to often mark the end of corrective waves. I hope this is one of those times. Okay, now the RUT and the SPX don't show that 38.2 retracement, and I'm a little bit hard pressed to say that they are due on. They look as good to turn around on Monday, rather than hem and haw and give you other reasons why I think they will. I'll just suffice to say that the Dow and the NASDAQ composite look good. It's good candidates to turn right on Monday. And less of a good argument could be made for the RUT and the S&P 500, at least based on these fib retracements. JP Morgan, I consider a market leader and a market bellwether, along with Amazon and Apple. That's why I charted them. I also did chart the RUT, and I could easily chart the SPX, but I don't know if I'm going to bother. I will certainly go through the charts of Amazon, JPM, and Apple. Okay, let's take a look. JP Morgan Chase. All right. So what we have on, well, what we had on Thursday was a yucky looking engulfing candle, which is negative, no question about it. But where are we? We closed just above the 61.8% retracement from the lows of 325. I didn't look at the full retracement on this one because this one didn't have the kind of chart that demanded it. It had a big reversal on the 19th of March and made a significant low right on the 25th of March. So this is a logical point to look for a fib retracement from. And I get exactly 61.8%, a little bit above that at the close. So can it retest the 61.8? Yes, it can, or it can go straight up. We hope straight up. All right, let's look at amazon.com. I'm really interested in looking at these fib retracement numbers, but of course, there's many other support levels. And I did draw many other support lines. I just don't want to repeat what I may have already said and what might be a lot gloomier levels. All right, this one I'm looking to retrace similar picture to JP Morgan, only I'm looking at the February 8th low here. And from the February 8th low to the high on 5.3, let's see how much we went down. Well, we're just above the 50% level, which is over here, 1762. Well, we're 13 points above it. So can Amazon go down another 13 points? Why, of course, but it doesn't have to. It could stop 5 points away or stop 13 points away where it is. So Amazon looks, based on fib numbers, to be in a great position to stop right at the 50% retrace level. It looks like I also charted it from the full retrace level, and that would be a ways to go to get to the 61.8%. So this looks like the better place anyway. So I'm liking Amazon right about here, maybe a few points lower. And one way to play this market is just to buy Amazon. It seems to be a proxy for the market. All right, Apple. Apple 175.07, yucky poo. I don't think I have as good a fib number for Apple as I did for Amazon or JP Morgan, but we'll take a look. Okay, so I mean, I could have looked at it from here, but this doesn't look as significant a low as the others did, so I didn't. And if I look at the full retracement, what do we get? 38.2% would be down here, up here, I mean, and we went way through that. 50% we touched yesterday. I mean, on Friday, it went through it. So we're midway at the close between the 50% and the 61.8% on Apple. 61.8% would give you 169. So it is possible Apple can come down another 3 to 6 points. So this is not quite as close as Amazon and JP Morgan, but close enough for Dr. J. I mean, if it stopped on Monday and went straight up, it would be fine. If it's entitled to go down a little more and still be fine. The rut, I'm not going to even look at it because I don't want to hem and haw or do magical stuff to make it work. So I think we have legitimate fib levels of support for Apple, Amazon, JP Morgan, the composite, and the Dow Jones Industrial Averages. Kamal says, I believe the market will turn around for a couple of days and it will dive back down. How do you come to that conclusion, Kamal? I mean, you could say anything. If you look in your crystal ball and it says up and down, fine. But I don't have that crystal ball to say up and down. I'm going to say down and up. And up, 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 up and away, because I'm an optimist. Are you quoting somebody, or is this strictly your own opinion? If there's some more negativity out there, I don't blame you. When you see nothing but red, when you see a nosedive type decline off the highs, it's hard to remain optimistic. It's hard to remain bullish. Most of the bulls have given up on Wall Street and have gone over to the bears. They've given up the fight. Dr. J has not given up the fight. And I probably won't unless it goes through that 61.8% level. And then I'll say, okay, we're probably going to do a full retrace all the way back. But I'm not saying that just yet. So that's how I feel about it. You can entitled to disagree as Kamal. That's your privilege. I'm not going to hit stop broadcast this time. That was my mistake before. So I'm going to stop screen sharing. And hopefully I get the camera back on me so I can bid you all a proper farewell. Adjust bandwidth? How do I do that? All right, this is Dr. J. I've been streaming live from Long Island, New York, where the hailstorm that we got has cleared up. And the sun, now there's no sun shining at 7:22. But it was really a gorgeous day earlier, one that was probably the best day of the year. And that's a good omen for Monday, following the Sunday that we had today. So as always, I bid you adieu, remind you to please subscribe to the vlog, tell your friends about me, give me that thumbs up, be forever optimistic like Dr. J. It does no good to be pessimistic. It does no good to have negative thoughts. Think positively and you will succeed in life. This has been Dr. J, streaming live from Long Island, New York. We're bidding you adieu, au revoir, arrivederci, shalom, ciao. See you all soon.